So ITC's earnings in Q4 FY21 actually has been a mixed set of numbers this time around, where revenue is above the 18 expectation, above the street expectation, while the margins have been much below what the street was expecting as well as what we were expecting as well. So in terms of revenues, we're seeing a 22.6% growth coming in at 13,295 crores. So strong growth in the revenues, mainly led by the strong growth driven of around 79% in the agri business of the company as well. Overall, even the cigarette business has seen a full recovery coming in terms of the volumes. So that is also interestingly coming in over there for the cigarette business as well. But margins have surely been under pressure, 33.6% versus 38.4%, a strong contraction that we're seeing coming in the margins. And that is mainly due to the unfavorable mix that we're seeing, losses in the hotel business, as well as a decline in the margins of the cigarette business is something that has overall impacted the EBITDA performance and the operating performance of the company. While the profits of the company have declined by 1.3% on a year-on-year basis as expected. So all in all, and mixed set of numbers, volume growth for cigarette business has come in at 7 to 8% is what is the inferred volume growth. The revenue growths for cigarette like have also been what we were expecting, cigarette business as well as other FMCG business. But what has mainly driven the growth, overall revenue growth, is the agri business for the company. So all in all, a mixed set of numbers. Now, what are the brokerages also saying is some of the brokerages like Credit Suisse have maintained an outperformance stance of the company. JP Morgan is maintaining a neutral stance, along with Citi also maintaining a neutral stance, while Morgan Stanley has maintained an overweight stance on the company with a target price of 251 rupees per share after the revenue growths have been ahead of the estimate. So this is what is coming in for ITC today.
All right, so that's setting the context very nicely. Thanks so much for that, Vinny. On the earnings front with regard to ITC, how do you look at it as an investor though? Do you consider, if you are holding on to it, to continue holding on to it? What are the prospects of this counter? And also, if you haven't invested, should you consider investing in it right now? That's the conversation that we're going to have right now with Kunal Bothra, as well as Gaurang Shah, who's a Senior Vice President of Geojit Financial Services. Welcome to the both of you. Thank you so much for joining in, and good morning to you. I want to start with you, Kunal. It's looking obviously a little bit weak based on what we're seeing in trade today on the back of the earnings. But on the charts, what are the indicators that you're picking up?
Lex, so I think for ITC, I think it's the same old story which has been going on since last 3-4 years. That the stock has been an absolute drag. You look at the charts as well. And I've marked up, the trends for the stock since 2018 onwards, when the stock had, made a high of 340, 350 approximately. From there on, it's been consistently, going through a downward patch, making a pattern of lower highs and lower lows. In fact, if you look at the very recent charts from the 2020 lows, yes, the stock has recovered from those 160, 155 zone. But then, it's been a very feeble kind of recovery. The uptrend has been very staggered. You see that the stock has taken resistance at 2 times on the rising trend line or the rising channel pattern as well for ITC. So it's a stock which is, testing a lot in terms of patience for, investors. But then, the trends, at least on the longer term charts, are still on a bit of a repair mode for the stock. Unless the bigger end of the trend line, which is at the 250 mark, if you can see the upper end of the trend line, if that gets taken out, then we could be calling in for a big reversal on ITC. Till that time, all those minor rallies could be sold into, and the stock may remain in a more of a consolidation. So I believe that the stock is in a more of a range. 250 and above is where I believe that the big breakout could happen for ITC, where it could end this 3-year, 4-year consolidation and start a very strong uptrend for itself.
All right, that's a view coming in from Kunal on ITC. Gaurang, what's your view on ITC? A while back, actually a few weeks back, when we spoke to another analyst, said the ITC is like an FD. You keep it there safe and you keep that savings there. So do you view at ITC the similar way? Should you just invest in ITC and forget, or should one who's already invested in ITC look to actually move to another stock? Because, after a point, you kind of get fed up when you see the stock actually consolidating in the same range.
Thank you, Cheryl, and morning to all of you also. I would definitely agree that it's the same old story like Kunal mentioned a while back. But as you were discussing with your colleague as well on the numbers that ITC came out last week, we believe it is the same old story, but there is a twist in this. And the twist is in form of non-tobacco business contribution that has kind of improved and reached a elevated level, especially with respect to the e-chopal, that is the agri-business that ITC has, and along with that, the FMCG business looks contributing to a higher level. Hotels and tobacco business has seen a drag. Of course, hotels, given the backdrop, undeniably. And the statement that you made, Cheryl, that it is like in the bank FD, I would beg to differ over here because bank FD is low risk, low return, and you get a fixed set of return over there. Whereas equities stock like ITC can be a little bit volatile and vulnerable. And given the historical track record of being an underperformer, despite of it being an FMCG major. Having said that, let me say this on the earnings front, we remain structurally and fundamentally positive on ITC. We expect the non-tobacco business to contribute to a higher level going forward from here on, especially with the FMCG agribusiness and paper and then hotel industry as things get back to the new normal that we live in. So we have set aside a target of 265, but I will also say this that ITC has tested patience for investors and it will continue to test patience and it might be a long wait. Undeniably, moment it goes towards 220, 225, you have overhead supply coming in, people wanting to exit. But if you have the patience and if you have the investment in ITC, that stay invested, 265 is the target. If you've not invested, there are better stocks to invest in like Tata Consumer, HUL, Godrej Consumer Products, Imami, Dabur, Marico. I think they would possibly have a better run rate.
Quick follow-up from my end. Now,
Sure.
when you look at ITC, I think to a certain extent, the meme game is very strong. Just
Right.
before the earnings, you have a lot of memes coming out on social media saying investors waiting for ITC results. You have the stock price that has become, to a certain extent, a bit of a joke with people saying once it crosses this, it just keeps going back. You just mentioned that, right? But at what point would you say that a re-rating will take place? You mentioned the non-tobacco business, but then we've been waiting for that for a while for it to turn around. What do you think needs to happen dramatically in the next 1 year, 1.5 years for there to be a significant re-rating in the stock?
So I think, Alex, the business strategy with respect to the non-tobacco business, especially the growth verticals which have the potential of contributing to the higher side. And when I say that, I mean businesses like FMCG, agri, and paper. Hotel industry, because of the unfortunate pandemic that has hit the entire world, hotel industry across the globe has been on a slow growth trajectory, given the kind of restriction that that sector has to live in. But my sense is that the management, and we expect that on the fundamental side, Alex, when I say that we are fundamentally positive from a long-term point of view, the management has given verbatim, and we expect concrete ground level steps being taken for contribution for non-tobacco businesses to grow. And we are quite excited for the FMCG business and agri business. And agri business, especially, given the fact that you have the third consecutive year of long-term average monsoon in India, about close to 98%. That is what the Met Department has predicted. In that scenario, I think agri business should contribute to a great extent. But for that, I think there has to be some dedicated effort and business strategy put into place so that the contribution from non-tobacco business can drive the earnings to a higher level and re-rate the stock. I would also go to the extent, and I possibly, Kunal is a better person since the technicals are also involved over here. I think moment it takes off 225, 230, you could possibly see the strength and momentum coming back. This is purely my guess.
Yeah, actually, even I think Kunal also spoke about the level. I think it was 250, if I'm not wrong, Kunal. You can correct me if I'm wrong. You said that if the stock crosses 250 level, there could be a big breakout in ITC. Is that right?
Yeah, yeah, that's right. And I just wanted to add one point for ITC, since we're discussing that extensively, that, it's been one of the stock which is favorite for covered call, writers. So whenever there is a strategy on option side, ITC is one of the few stocks which tends to get more writing of call options. So I remember, I think even on the results day yesterday, as well as the last 2, 3 days of the fresh series, 220 and 230 strikes were the that is a ceiling for the stock. So till the time these call writers are not made to square off their positions or cut their positions very aggressively, the stock would remain in such a kind of a downward drift.
Absolutely. All right. So we've had a very in-depth conversation on ITC, Kunal as well as Gaurang.